Iran's trade sanctions were lifted on Saturday after UN inspectors confirmed that Tehran had reduced its nuclear weapons program in accordance with the historic July deal with the international community. Iran's oil global market re-entry leads to further dip in oil prices when it has already reached an 11-year low. How will the price dip affect the Korean economy? Our Kwon Jang tries to provide some answers on our news features tonight.
The global price of oil has been on a continuous downfall. A barrel of oil in June 2014 cost over $100, but by December last year, the price hit $35. Since then, it has dropped even further in just 1 month, going below the $30 mark. It's the lowest it has been since 2003.
The reason why oil prices have been dropping is because supply has increased greatly. In the U.S., shale oil production has grown rapidly, and that led to fierce competition in the market with Saudi Arabia and other oil nations in the Middle East. Supply overtook the demand.
On January 16th, the U.S. and the European Commission lifted their sanctions on Iran. This means that for the first time since 2012, Tehran will be able to trade its huge oil reserves with the rest of the world, adding more oil to an already oversupplied market. Oil barrels are piling up, but the world's biggest consumer of oil, China, is not consuming as it should be due to a flagging economy, thus slowing demand. On top of that, if the US interest rate hike keeps strengthening the US dollar, then oil prices are expected to fall even further. Meanwhile, gasoline prices have dropped in Korea, providing some relief to drivers nationwide. In Seoul, a litre of gasoline is now hovering around 1,300 Korean won, the lowest it's been since 2009.
The gas price is so low that it has been cheaper to drive these days. In fact, when I fill up $30 worth of gas, like I used to do, I definitely seem to get more mileage.
I can notice the difference. For the same price, we're getting more gas, so it's helping cut our expenses.
This 500 milliliter bottle of Coke costs 1,900 won. That's just over $1.50. That means now a litre of gasoline costs less than a bottle of soda, a fact that isn't lost on Korean car drivers. But how else does falling oil prices affect the Korean economy? Korea's construction industry has been hit the hardest. Currently, many of Korea's construction contracts are in the Middle Eastern region and oil-producing countries, and cheaper oil has meant less profits to spend on construction projects. Revenue from overseas construction projects has been falling since 2010, and for the first time in 6 years, it has dropped below the $5 billion mark. When oil prices first started falling towards the end of 2014, many considered it a blessing for the Korean economy.
Because Korea imports all of its oil, when the price of oil drops, the amount of money leaving the country drops. This also means buying power increases, leading to markets, businesses, and even politics to be invigorated.
When oversupply crashed global oil prices in 1986, companies' operating costs fell, leading to increased competition in the market. Exports increased, the trade balance flipped, and Korea's buying power grew. The difference with the oil price crash this time is that it came at a time of an economic recession and shrinking exports. For Korea's economy, which is heavily dependent on exports, it was a severe blow.
The current situation, where a huge emerging nation like China is suffering a downturn, means that we can't expect to see the same boost the country experienced from low oil prices before.
Economists have said that they expect the current level of low oil prices to continue for another 2 to 3 years. To minimize the negative effects of falling oil prices on the Korean economy and maximize opportunities, experts urge for the need of industry reforms.
We need to develop a plan where we rely less on industries that are dependent on oil, so that oil price fluctuations have less effect on our economy. To protect ourselves from the negative effects, there are few alternatives other than diversifying our export markets.
It looks like cheap oil will be around for a while, and this, more than anything else, could present a good opportunity for Korea to take steps towards structural reform. Kwon Jang, Arirang News.